me what is going to happen under what I understand to be the terms of the bill right now if Freddie and Fannie were to go under.
Well, let us assume for a minute, and I think this is an estimate that's very credible, that the cost is $450 billion.
Wow.
Somewhere between that and $500 billion ultimately is what it could cost the U.S. government and cost taxpayers. Then you have to anticipate that that will be added to the debt, right? That taxpayers will have to pay off with interest. That means that we'll go out and borrow even more money, thus risking the fact that credit rating agencies right now are saying they might have to downgrade U.S. Treasuries. The approach Republicans had adopted here was to try to get this not paid for by the taxpayers and not putting at risk, this kind of additional deficit. And the Democrats succeeded today in stripping that out of the bill.
Well, and that's what's so shocking about this, because you have the Democrats basically defending the financial institutions, saying they shouldn't pick up the tab for Freddie Mac and Fannie Mae. And, of course,
right,
they were part of this, right? I mean, they were part of
yes,
the whole mortgage meltdown. You can certainly make a case they had a role in what happened. Should they pick up part of this tab, Congressman?
Well, and you have to also look at those who are serving on the committee right now, Mr. Dodd and Mr. Frank, because those two chairmen played the most prominent role in the 1992 GSE Act, which was passed here by Congress. That is what mandated these affordable housing goals on the government-sponsored enterprises. As a direct result of that, we ended up with 70% of subprime lending basically being underwritten or being in the mortgage portfolios of these two institutions. That's where the collapse began, in the housing market. That was 85% of their losses. So the same architects of that policy now sit on this conference committee.
And you see what they're doing here. Congressman, let me ask you this. We know that Freddie and Fannie are responsible for roughly half, maybe more, of the mortgage loans. They stand behind it. They're involved. They're not making the loans, but they're critical to what's going on. Democrats are fond of saying if you take out Freddie, if you take out Fannie, which is what the Republicans want to do, the housing market will crumble. The housing market will crumble. I just want to ask you this one question very specifically, sir. What would happen to the housing market if Freddie and Fannie exited, if they no longer served the role they have right now?
Let me make a correction. What the Republicans had supported was Fannie and Freddie securitizing loans, but not to be mandated to buy up these subprime loans and not mandated to do this affordable housing. So what we tried and what I tried with my amendment to take out of the legislation was this requirement on affordable housing, was the requirement on the type of risky behavior that put us in this position.
I understand,
and that's what the Democrats are resisting. It's not a debate over eliminating Fannie and Freddie over the next year or two. No, that's not the debate right now.
That's not the point of my question. You misunderstand.
Yes.
My simple question is this. Republicans have said, let's find a solution for Freddie and Fannie. Put them in the bill. Let's do something. Democrats have said no. Democrats have said if you take Freddie and Fannie out of the mix, we will not have a housing market. There will be no loans made. Do you agree with that?
But we're not taking them out of the mix. We're not taking them out of the mix. We're simply reforming the way in which these institutions work going forward. And that's what's being lost, I think, in debate. Because I know what Chairman Frank accuses us of, but remember, we are not arguing for the elimination of Fannie and Freddie. We are arguing for the restructure of these institutions going forward and removing this mandate of affordable housing goals and so forth.
Sir, my question is simply this.
Yes.
Can the housing market at this point in time operate without government-sponsored enterprises? Do those entities have to be functioning just as they are now to allow the market to continue?
And they have to be reformed so that they're not given these mandates that make them dysfunctional. And we have to bring back the private market in the meantime. And what, unfortunately, the Democrats are doing in other parts of the legislation is crimping the return of the private markets and harming the capital markets. And I'll just speak for a moment in terms of the way in which this legislation harms our capital markets. Well, the idea that we're going to have permanent government bailouts in which the biggest institutions are guaranteed by the FDIC that their creditors are going to be bailed out, maybe 100 cents on the dollar, and so their cost of capital and cost of borrowing is going to be much lower than their smaller competition, that does not help markets return in the U.S.
So,
I mean,
so you're
that's
making the point here
that
far from getting rid of too big to fail, it only institutionalizes it.
Absolutely.
Congressman, I'd love to have you back to talk about that as well. Thank you so much for your help today.
Thank you very much.